the more soybeans that China buys now, the less that they have to buy later. Thanks for joining me on the CommStock channel. I'm Senior Analyst Brian Grete, and we want to talk a little bit more today about the U.S. China soybean deal and what we know, what we think we know, the impacts and opportunities that this deal may present, both here in the United States and in Brazil. And I think that this has ramifications for more than just the United States. Obviously, it will impact Brazil in some degree as well. And so let's look at, first off, what we know or what we think we know in that trade deal. Based on what U.S. officials told us yesterday, that China agreed to buy 12 million tons of U.S. soybeans through January, and then another 25 million tons each of the next 3 years on an annual basis. And so if you add that all together, that's 12 plus 25 plus 25 plus 25. So 87 million metric tons of soybean purchases that were apparently agreed to. Now, on the readouts from the Chinese side of things, they didn't give any specifics, just said that they would increase their agricultural imports and didn't specify soybeans in particular. So there has been working groups that will be developed for both the U.S. and Chinese side that will sit down and hammer out the finer details of this trade deal. And that will happen almost immediately here. And so we should get some more details starting to surface. But I'm not sure that all of those details are yet ironed out. And so that 87 million tons that U.S. officials have said will be purchased by China is probably right, but we don't know that for certain. So first off, I want to take a look at this chart. And what I did was I took the 5.9 million tons that the U.S. had already exported to China in the first 5 months of 2025. I added to that the 12 million tons agreed to, or apparently agreed to in the agreement. And then if you look out for 2026, 2027, 2028, I just added in those 25 million tons that U.S. officials say China agreed to buy at least that level for those 3 years. And so that's what's represented there on the chart. Now, the horizontal line that you will see in there, the 10-year average from 2015 to 2024, is 27.1 million tons for that 10-year time frame. If you would subtract out the 2018 and 2019 time frame, we'll call that Trade War 1 with China, the average for the remaining 8 years would actually jump to about 30 million tons. So that 25 million tons would be shy of the 10-year average, and also more shy of the 8-year average if you remove the first trade war, just to put it a little bit into perspective there. So there is more room to move to the upside, I think, if prices are right. And that's the big thing here. So China's basically agreed to buy not quite what it did over the 10-year period, and definitely what it didn't buy over the 8-year period if you take out the first trade war. But this covers them on supplies, diversifies away from Brazil a little bit, while Brazil remaining its number one supplier. So I don't think this broke the bank by any means for China in terms of agreeing to buy those 25 million tons for the following 3 years. Now, there is a little bit of a caveat that came to me that what if China thinks that that 12 million tons that it's already purchased or already imported for the 2025 calendar year is included in the 12 million tons that it agreed to. So that would basically have that amount. And this is all stuff that will be hammered out as we move forward here. So we don't probably know as much as what some people think they know on this situation. We only know what U.S. officials have told us. And importantly, Chinese officials haven't given any volumes yet that I'm aware of anyway. And so we'll be watching for that. We'll be watching for further details as these working groups hammer out some of the finer points and give us some of that data. And that will all be critical as we move forward in the analysis of the deal and impacts of the deal. But what we know now is 12 million tons by China through the remainder of 2025, another 25 million tons each year for the following 3 years. And so we go forward with that information. As you would expect, this trade deal has had an impact on U.S. export prices and also on Brazilian export prices. And what we've seen is, start off with Brazil, they've kind of leveled off a little bit in here, and we've seen the U.S. prices move up. And so as we close out October, the spread between those two is only about $10 per metric ton and really tight, the tightest that we've seen. So the U.S. price is trading at a one-year high, the highest level it has over the past 52 weeks, while the Brazilian price is elevated and near its 52-week high. It's leveled off. And this is where some of the finer points of the details in this deal come into play, because if China doesn't roll back its tariffs, we would actually see the U.S. price be above the Brazilian price. And so that will all come into play, I'm sure, in terms of what China buys and who buys for China and those types of things, but an impact both in the United States on prices and in Brazil. When we look at the weekly continuation chart for soybean futures, as you will see, a big jump up in prices. Now, we're still well below levels that we've been trading over the previous years. Going back to 2022 on this chart, you can see we were well above where we're at right now. But this move up in soybeans is the strongest that we've seen in quite some time and gives you a selling opportunity as a U.S. producer. And so now the question becomes, how much higher can we go? Well, if you look at this chart, there's a lot of upside to run to. I'm just not convinced that the fundamentals at this point in time or the trade deal that's in place or that we think is in place is enough to give us a significant upside boost beyond what we've already seen in the soybean market. So we kind of front run this one a little bit in the marketplace and in anticipation that there would be a deal. And then we got the deal done and we further extended to the upside. So this one probably is fairly long in the tooth in terms of what we get from a price perspective, unless there's some sort of bullish element that we don't know yet in the finer point of those details. Your immediate selling opportunity, January soybean futures, much the same situation. We are at the highest price that we've seen in January soybean futures in over a year. So you'd have to go back to September of last year to see prices at these levels. And the marketplace is giving you an opportunity. Now, the marketplace is also giving the Brazilian producer an opportunity. And what do I mean by that? Brazilian producers, their new crop contract is May soybean futures. And as you can see here, they have also moved sharply to the upside. Now, keep in mind, the Brazilian soybean planting season starts in early September. So if you look back to that time frame on this chart, we've moved up significantly since Brazilian producers have started planting their crop. They were slow to plant in some of the areas of central Brazil because of dryness. They've caught up to the normal rate in those areas, but they still have a fair amount of crop to seed. And so the move up in soybean prices could actually present an opportunity for Brazilian producers to plant some more of the 2025-26 crop to soybeans than they had originally planted. Probably not major changes at this point in time in terms of acreage, but there is a possibility through central areas, so Mato Grosso, maybe areas of Paraná, and some of the other major producing areas in central Brazil could see an expansion of soybean acres beyond what was originally intended. But this is an opportunity, and the Brazilian Soybean Producers Association is already out there telling producers that take advantage of this. And so not only is it having a near-term impact in terms of Brazilian export prices, it could have an impact in terms of what the Brazilian producer plants and gets paid for their crop for the 25-26 marketing year, assuming that they take advantage of this opportunity. And Brazilian producers are usually pretty keen and attuned to the marketplace in terms of opportunities and will likely take advantage of it. Now, they still have to have the weather to produce the crop, so they still have to have rains as we move through what should be a more regular rainfall pattern moving into November, December timeframe. The key will be, I think, is when the rainy season shuts off. And so if they have a normal rainy season or extended rainy season, it would be definitely beneficial for the Brazilian soybean producer. If those rains shut off early, then, we may see some of the late planted soybeans not have as good a finish as what they would have anticipated or wanted. And so that's all critical. And if it becomes excessively wet as we move into Brazilian harvest timeframe in late January, February, March timeframe, and even later, then you could see some quality issues with the Brazilian crop. And that would all tie back into potentially what China would be willing to buy. So the more soybeans that China buys now, the less that they have to buy later. But obviously, those decisions could be impacted by the supply coming out of Brazil, obviously for the 25-26 growing season. And so we know a lot on what's going on with China, the United States, and impacts for Brazil, but there's still a lot yet to be determined on this front. And so this will be a very fluid situation, a situation that the soybean market will react to as we move forward. And so a lot of moving parts still, even though we know more now than what we did a couple days ago. For the CommStock channel, I'm analyst Brian Grete.
Futures trading involves risk. The risk of loss in trading futures and/or options is substantial, and each investor and/or trader must consider whether this is a suitable investment. Past performance is not indicative of future results.